Hey traders, welcome to Charts and Coffee. Hope everyone's having a good Tuesday morning. Just a quick reminder that tomorrow is a half day, Wednesday, the 3rd. Of course, the 4th is the markets are closed. It's a bank holiday. And then Friday, we've got non-farm payroll. Today, we are going to hear from Jerome Powell. So let's go take a quick peek at the economic calendar. This time of year, here we are, beginning of July, less than 2 weeks from the kickoff to the next earnings season. The sun just decides to throw my well done lighting here in the office completely off. All right, so we're going into earnings season. So there's really 3 calendars that I would recommend taking a look at. Now, why 3? Well, one is Forex Factory, and that's definitely the staple. If there's any calendar you're going to visit on a regular basis, just to make sure you know what you'll be contending with in terms of hot zone volatility. We got Fed Chair Powell right at the bell. He's speaking in a panel discussion for the ECB, the European Central Bank. That's why you'll see Lagarde as well there. So they're on a panel. This could be obviously watched pretty closely for any insight into the messaging around will they or won't they cut in September. November and December seem to be fairly sure things. Nothing's a sure thing until it happens. But remember, we collectively trade on the expectation of the cut, not the cut itself. That's why buy the rumor, sell the news is true, right? Because that's typically what traders and investors do. So taking a look at Powell, then we have JOLTS. So there's 2 major jobs releases this week. The first one is the hot zone of the job openings. The second one is on Friday with how many new jobs were created in the past 30 days. That's non-farm. So both those are coming up. Why do they matter? Because the Federal Reserve has a dual mandate. Yes, we talk a lot about inflation, but a close second is employment. So both of those are going to be major hot zones, stepping stones, if you will, to whether or not we have a September cut. So right now we're on track for 2 to 3/4 point cuts. 1 for sure. 1 is fully baked in. 2 is very likely. 3 is still kind of on the bubble. All right. So that's the economic event. I mentioned 3 calendars. Sometimes Forex Factory won't list all the different Fed speaking events. So I'll also keep an eye on tradingeconomics.com. And then as we go into earnings season, we're going to have to keep an eye. We want at least a 2-week heads up, not a cute little graphic about what's coming out this week. We need about a 2-week minimum heads up on those economic releases. And you can see here, we're 2 weeks out, not even 2 weeks out from Citi, JP Morgan, Wells Fargo on the 12th. So don't be surprised to see maybe a little bit of action in the financials as we're getting into earnings. So keep an eye on that as well. And Estimize is what I use for tracking earnings because it's the only one that I have found that gives me a way to curate a list of those earnings that I want to follow, those high concentration weighted stocks that are going to impact the sector, that are going to impact the index. So I have a curated list and a really good heads up. I mean, I could scroll all the way out to what's going to happen in August, right? We need that kind of outlook for understanding the impact of earnings. All right, that being said, let's jump on into what's going on this morning. My Sector Secrets Mastery folks that are listening in, shout out to you all. I did send out the reminder that we have the updated position sizing guide. I get that question so much. Rag, how do you position size? Follow the Holy Grail workshop. Use that position sizing guide. It's sitting in the files drive in the Sector Secrets Mastery trading room, as well as I alerted out that it's a very short 3-part video series that shows you where to get the guide, how to use it, and what the adjustments are that we're going to make going into summer with some of this volatility. All right, so check that out. In the meantime, we can see it's a little heavy on the S&P this morning. Now, remember, the S&P is not necessarily the leader in the indices right now. It's really tech. And the S&P is coattailing tech because of the weighting in stocks that it shares with the NASDAQ. So remember, as we like to say, there's 2 ways you can look at it, whichever resonates with you. The S&P is a little puppy that the NASDAQ takes for a walk. Or remember, the S&P is never the captain of its own ship. It shares enough by way of high concentration weighted stocks with the NASDAQ and the Dow, where the more clarity we see in those two, the better follow through we're going to see in the S&P. So NASDAQ certainly the leader here. A little heavy today. This is a very, again, once again, we have a midweek holiday. It's summer. Typically, summer participation is less, but it's not bearish, right? So there's a big difference between saying the money goes to the Hamptons versus it's a bearish summer. And that's not the case at all. Historically, summers are not bearish. However, this week is one of those weeks where, yeah, folks are going to phone it in because we have this holiday. But really, are they going to? There's going to be a tension on the market today. Powell speaking. We have jolts. There's going to be a tension on Friday. We have non-farm payroll. So it's going to be more sporadic participation, not steady. And you're probably already sensing that summer tends to wander a little bit more than, say, the spring trading season and the fall to winter trading season. Summer can be a little bit wonky. All right. So with all that being said, we continue to see good support. I won't say strength. I mean, it's an uptrend. We see good support in the NASDAQ. Crude oil continues to climb higher. One of the things we talked about as we wrapped up Q2 and going into Q3 was that there are some stocks within oil services, OIH and XLE, that are starting to show a little bit of leadership because of the fact that crude oil is finding buyers north of $82 a barrel. All right. So we want to keep an eye on crude oil and those stocks that could follow crude higher. There's going to be a lag, right? It's not as if Exxon or Schlumberger or Occidental or Chevron or Devon or ConocoPhillips just jump higher because crude is, but they're definitely going to be tracking. And if that trend can continue, it's not a trend yet, but if that bullishness can continue, good bullish momentum, green candles, then you're going to see certain stocks start to key in on that. And what we can probably see some good strength out of those. So those are definitely a lagging sectors. Those are definitely a lagging set of sectors for 2024. But keep an eye on them. I don't want to be short those sectors going into the remainder of the year, most especially if crude oil continues its climb higher. All right. So as always, if anyone has any questions, feel free to type them on in. And sip of coffee. Oh, that is good. I have been using this instant coffee. I know, but it's good. It's a mix of coffee, yerba mate, and something else with some theanine, some little salt. It's pretty darn good. I've been enjoying the heck out of it. Throw a little cinnamon in there and I'm right as rain. So we are caffeinated and ready to go. All right. So questions, as always, if you want to follow what we're doing, if you want some, look, if you're needing some guidance on how to build watch lists, if you're needing some guidance on, Rog, I don't know how to position size. I don't know where to place my stops in order to really optimize for account growth. That's really something that I would say I have spent the most time in my career focusing on, because I was always taught the cardinal sin is blowing up an account. And it's not necessarily your fault if you've blown up an account. It's usually that part of your trading education, it just has a big gaping hole in it because no one sat down and said, hey, what's in your account? What's your maximum desired account risk? How do you structure trades to work within those confines? And it's really important. So we do a lot of that in the mastery. If you want to check out what we're doing, you can check it out over at sectorsecrets.com. And summer's a great time to join us in the room because we kind of go into summer school. Every now and then I'll kind of take my trader hat off. We're still getting plenty of trades and activity. We still day trade, scalp. We're going to have our monthly position portfolio discussion at 3:00 today, where we've been continuing to grow a portfolio over the past 2 years that has been doing very, very well. How do we manage new entries there? So we'll be having that at 3:00. But, I'll put my professor hat on every now and then during summer, and we'll get into some basics like, how do I trade futures options? How do we position size better? How do we adapt to volatility? How do we even measure volatility? So if you're finding, yeah, Rob, summer school would be really great. While everyone else is sipping a wine spritzer by the pool, we're getting ready to kick butt in the fall trading season and through summer. All right, so let's see. What do we got? Walmart. I do like the Walmart long side. We had one of my top 3 trades of June was just sticking with what was a very boring but bullish Walmart. And I want to do that again, absolutely closing in on another maybe Darvis and daily price movement range entry. Staples are not weak, gang. Despite the fact that the NASDAQ is quite strong, staples are not weak. Staples are still one of the top 5 and have been pretty steadily top 4, top 5, top 6 sectors. So there's still interest in a little bit of defensives, whether that be Coke, Costco, Walmart. Absolutely. We'll be keeping an eye on that one as we go into today's session. All right. Was that a sub to look at coffee futures? No, I don't typically trade coffee futures. No, I typically don't. But drinking coffee, yeah, maybe for sure. We don't call it charts and coffee for nothing. Eddie says, I haven't been to summer school in years. This is the good kind. This is the good kind of summer school where we are honing our skills, working on new nuances, and just trying to get better every year. After 30 plus years, it's amazing what I say, gosh, I only knew that much my first 10 years. I mean, I realized my first 10 years, I was an absolute neophyte compared to what I know now. Fast forward 30 plus years into my trading career. I do really think that nothing else is, I realized 2 things. How many of you are NHRA drag racing fans? I'm watching these NHRA drag racers. The champ for Pro Stock is 59 years old. That's the fountain of youth. So if you don't want to drag race, that was something my husband and I did our first wedding anniversary. We did a Pro Stock motorcycle school. I'm convinced that keeps you young, but if that's not your jam, trading keeps you sharp, because every season there's something else you learn new about trading, and I love that. But the basics are still the same. Position sizing, risk management, building a watch list that's optimized for follow through. While the basics don't change, the markets are always teaching us something new. Talk about neuroplasticity, right? All right. So, Tina, yes, will there be a sale? There will be. And price movement range. I want to remind everybody, if you're coming up on your daily price movement range or hourly price movement ranges, that subscription expiring, or you want more months of that data, we just released a new batch of updates for the price movement ranges. Yeah, use the sale. It's usually a really great time to re-up. So yes, the 4th of July sale, I believe, is going on right now. I don't know what the code is, but I'm sure the bot will type it in here any moment. So yeah, I always encourage everybody, save some money during the sales, put that cash you save into your trading account. All right, is USO bullish? Christina, yes. If crude oil is moving higher, USO is the ETF that's tethered to crude, and USO has been. But be careful with USO, because it's sometimes at the option chain level can be a little illiquid. And I really encourage traders to, when you are buying calls, when you are buying puts, which is exactly what we do in the Sector Secrets Mastery. Rog, what kind of trades are you putting on? Gang, long calls, long puts, directional debits in a cash account. No pattern day trading rule issues. I'm not leveraging in any significant way other than the beautiful leverage options themselves give us. Very straightforward approach on finding trends and just following them. All right, kind of case in point, Amazon. We've got a long position in Amazon. We're taking advantage of some bullish candles. We're taking advantage of really consumer discretionary, playing catch up to communications, tech, and semiconductors. One of the main reasons the NASDAQ's been as supported as it is. As far as Apple goes, what are my thoughts on an Apple swing trade? We've hit the daily price movement range, and this is where, gang, there are so many trades that are out there. And even if it's a trade that we just discussed, but maybe not an alert in the room, one of the things I love about the Sector Secrets Mastery is we are a focused group of traders. We have a set number of indicators we're looking at. My indicators are remarkably the same as, 10, 20 years ago. And so with that consistency, we had a group of traders that are looking in the market in a very similar way. So a lot of traders will look at things that maybe I'm even not looking at from time to time, because you have the beauty of automation, whether that be the top tier tools or the grab tools, whether that be the PMRs. So yeah, when you take a look at Apple, Apple's been pretty consistently testing the DPMR. I did not want to be bullish into Apple as Q2 wound down. That is some kind of sun coming in right now. It's just bouncing right off the water. So if we take a look at Apple now into July, yeah, I did not want to be bullish at the end of June as much as I do want to look for the resumption of trends in Apple, Nvidia, semiconductors, tech. Even Microsoft has joined the party now. So I do like that idea of Apple daily price movement range. Now, remember, we still have Powell coming up in 15 minutes. We still have JOLTS coming up in 45 minutes. We still have non-farm payroll. And all of those events could affect overall risk appetite because they're going to map to what our expectations are for rate cuts. So there's not much that's going to be able to withstand, if there is a very strong JOLTS and non-farm as we wrap up the week, there'll be less expectation for a September rate cut. And it's not that equities will just tumble. It's amazing how much bearishness there is still out there. As long as we are on track for 2 to 3 rate cuts, this is not the environment to look for deep pullbacks, maybe retracements, dips that we would buy into, but this is not the time to be bearish. Not with those rate cuts and the hope and promise of lower rates still on the horizon. All right, next up, is it time for a Qualcomm? Qualcomm is one of the few stocks, Smoke Divine, in the semiconductors that I am not interested in. I'd rather focus on TSM, NVIDIA, and there are a couple spendy names, your LRCXs and your ASMLs, your AVGOs, but Micron's been quite strong. The semiconductor sector itself has been quite strong. So this is part of watch list building, right? If you're wondering, yeah, Rog, why would you differentiate between those two? Aren't they all part of the same group? Yes, but they're not all performing the same. And that's one of the nuances of watch list building that makes a huge difference as far as what's going to follow through and what probably might struggle, or we're going to need a lot of help from the overall rising tide of the sector to get it to go. So I would say no on Qualcomm, but yes, there is a lot of other names in semiconductors that look fantastic. Yeah. What about Bank of America? Bank of America, JP Morgan, and Citi are 3 of the stocks that remain on my watch list for financials. We're going into the earnings season potential run up, but financials have been a laggard, which is one of the reasons the S&P and the Dow haven't necessarily, well, I'll say specifically the Dow hasn't kept pace with the NASDAQ, because this XLF sector where these stocks belong is not as strong as, say, tech is. And so while I would look for some strength in those 3 names, financials is still largely a pretty messy sector that I've been steering clear of for now. As we get closer to earnings, or maybe after earnings, maybe this sector wakes up. But JP Morgan, Bank of America, and Citi would be the only names within financials that I'm really right now even remotely interested in. All right. And yes, that July sale is on. And I believe the code to get the discount is July 24, July 24. So when you go into the store and you grab your daily price movement ranges or your hourly price movement ranges or whatever it is you've been waiting to scoop up on a good deal, yeah, just when you check out, July 24. All right. So yeah, I would definitely keep an eye on Bank of America, JP Morgan, and Citi. All right. So that is, I believe that's a wrap, gang. So we'll be getting into the Sector Secrets Mastery Room this morning, taking a look at some day trades, taking a look at some swings like Walmart and a few others that we have on the list. If you were with me in the Central Room on Friday, I sent out the list of setups that we were looking at. Oh, I'm going to be in Central. Oh, yeah, I will be in Central today, as I normally am on Tuesday. But if you were with me on Friday, I sent out the notes, and you can see what we were looking at going into the end of Q2. Many of those positions triggered, and we're still in Amazon. So again, I'll be in the Central Room at 10:30 Eastern. Tesla was one of the names we did set up. Yeah, so definitely take a look at the notes there. All right, gang, as always, thank you so much for being here for Charts and Coffee. I'll be broadcasting every day this week. I'll see you tomorrow. I'll see you Thursday morning. What better a day to talk about trading than on Independence Day? So we'll definitely have charts and coffee Thursday morning as well. All right, gang, be good to each other. I'll talk with you soon.